Hello everyone, it's Professor Reiko here. We're going to do another video today on the indirect method for the statement of cash flows. So just like the previous video that I did, this will be kind of a lengthy video. It takes a little while to work through these cash flow problems, and I like to spend enough time explaining everything, so hopefully that will help you speed up when it comes to test time. All right, so when we get started here, remember our first step is I always kind of look at this number right here. I always say, okay, my cash went up by $5,600 this year. Okay, so that's great. Cash went up by 5,600. So we're good there. That's going to be our answer when we're all said and done. One thing to pay attention to this says as of June 30th. Don't let that trick you up. That's just their year end. That's fine. And once again, I think I forgot to say this in the last video. When you're doing your changes from year to year, always make sure you know which year is which, because sometimes they might put 2015 over here and 2014 over here. So just kind of pay attention to that, so make sure that doesn't throw you off. All right, so when I go through here, I'm kind of looking, all right, here's my current assets. Down here are my current liabilities. So those are going to be, I'm going to use the shortcut that I've taught you in previous videos in the operating section on that. My land will go in the investing section, building, depreciation, investing, and then remember, accumulated depreciation affects operating for depreciation expense, but also the investing as we're taking off the, if we sell something, we have to remove the accumulated depreciation. And then down here we have three long-term debt and equity things. So that's going to be in the financing section. So you don't have to write that on a test because that'll take a little bit of time. But I always try to, I'm kind of getting my bearings as I start a problem. I'm also always looking, like take for example land right here. Land went down by 3,000. So we could have bought some land, but at a minimum we had to sell some land. All right, buildings and equipment went up, so clearly we had to buy some. All right, so I'm always looking for things like that. Long-term note payable went up. Did we borrow more money? What happened there? Common stock went up. Did we issue more stock? And so forth. All right, and then we've got some additional information down here. So I usually just start my problem, because typically, remember we want to have, all this stuff worked out before I switch to the next page and start doing this. All right, so we have a building that was purchased for cash during the year. Okay, so that really tells me nothing right now. Okay, a building was purchased. All right, up here we can see that the building and equipment account went up, but what if we sold? So we can't just assume that this building was purchased for 12,000, the difference between the 48 and the 60, because what if we sold some? So we're going to end up having to reconcile that account, but we need to read through everything else and figure out. So we can't do, we'll have to come back to one. All right, number two, land was sold for cash during the year. Okay, that's the only land transaction. It said it was sold for a gain. So let's just slide down here. All right, and so that means my transaction would be I sold land for cash. All right, it says I sold it for a gain. Remember, gains are credits. And then I'd have land coming off the books. So we know there was 3,000 of land that came off the books. We know there's a $1,500 gain because that was given. So that means my cash number would be 4,500. All right, so remember, the 4,500 will go in the investing section, and then we will remove the gain in the operating section. Okay, so that land account now is reconciled. We're good to go there. Number three, interest expense and income taxes are given. That's a supplemental disclosure. I've talked in previous years. I said I usually don't make my students tack that on at the end, but it's just something that would be disclosed beneath your statement of cash flow. So kind of gauge what your teacher wants you to do with that type of stuff. Dividends were paid during the year, 3,500. All right, so now remember, dividends affect retained earnings. But remember, we also need net income. So I said in the previous video, if you look up there at the top, you can still see retained earnings. It changes from 1,200 to 15,700. All right, you are typically going to have to reconcile that account to either get the dividend number or the income number. Here, the dividend number is given to you. All right, so let's just come up here. I'll just come up here beside it, and we'll just set up a little T account. So you can do it equation form or T account form. All right, so we say the beginning balance here is 12,000, and the ending balance is 15,700. All right, well, how did we get there? Well, we increase retained earnings for net income. Okay, remember, it's a credit balance, so we increase it with a credit, and we decrease it for a dividend. Okay, so if we solve that through, net income equals 7,200. All right, so now that account is reconciled as well. All right, number 5 here, equipment with a book value of $1,600 and accumulated depreciation of $800 was sold for $1,200 cash. All right, so let's take care of this journal entry. We'll just do it right down here below. All right, so we are selling an asset, all right, which means we got to take the accumulated depreciation of it off the books. Okay, skip a space here because right now we don't know whether it's a gain or a loss. And then we have to take the equipment off the books. Okay, so it says equipment with a book value of $1,600. Remember, book value equals historical cost less accumulated depreciation. So if the book value is 16 and accumulated depreciation is 8, that means the equipment historical cost has to be $2,400. All right, we got to take the $800 accumulated depreciation off the books, and it says we sold it for $1,200 cash. All right, so we can see we need a debit here, so we're going to have a loss on this transaction of $400. And then we'll take the cash number, remember, we'll go in the investing cash flow section, and the loss we backed out in the operating section. So once again, when I'm doing this, I like to go through and do all the work right here, and that way when I flip to the next page, it's just a matter of filling things in. All right, so we've got things taken care of, but look, we didn't take care of number 1, so let's scroll back up and take care of number 1. All right, so it says building was purchased for cash during the year. All right, so once again, if we look up here, we can see the building and equipment account changed by $1,200. So let's just do a quick reconciliation of that. All right, that account. All right, so we say we start with 48,000, and we end with 60,000 in that account. Now notice that's buildings and equipment. Okay, so the purchase will increase it, and then that sale down in number 5 that we just did, we just took $2,400 of equipment off the books. Okay, so that means this is going to be $14,400 when you work it through. Okay, so that's what we purchased that for. And remember, that is a purchase of a fixed asset, so that's going to go in my investing cash flows section. Okay, the only thing missing now is depreciation. So if you look up here, you know, kind of look, remember, we're not concerned about the current assets because we're just going to do the shortcut, but land's been reconciled, that account's been reconciled. We haven't done depreciation expense. It doesn't say anything about these accounts right here, so we can assume we just borrowed more money. We can assume we just issued stock for cash. Okay, so let's see where I got some room. Let's go up here to the top, and we'll do our depreciation. All right, so remember, I'll write this out in equation form. So remember, all these you can do, I'll do this one both so you can see what I'm talking about. All right, so I can do an accumulated depreciation T account. All right, and I can say my beginning balance is 12.5. Remember, it's a credit balance because it's a contra asset. So it's 12.5. My ending balance is 14.8. All right, and it says we're trying to figure out depreciation expense. So remember, depreciation expense increases it. And then if you look down at the bottom of the page in number 5, we sold that asset for $800. I'm sorry, we sold the asset. We took $800 of accumulated depreciation off the books. All right, so if you work that through, you're going to get $3,100 as my depreciation expense. We can also write it out as an equation form, all right, and say, all right, my ending balance, how did I get to my ending balance? Well, I started with the beginning balance of 12.5. I added some depreciation in it, and I sold an asset and took $800 of accumulated depreciation off the books. If you run that through, you're going to get your $3,100. So either way you do it, whatever, you know, I would encourage you to pick a way that's you feel comfortable with and kind of go that way. All right. So with that being said, I believe we've got everything. All right. So now let's go to the next page and start filling stuff in. All right. So I just have a blank page here, and so let's start rolling through it. Okay, you'd have your heading up there, but as I said in previous videos, I typically just let my students omit the actual financial statement heading. All right, if your teacher makes you do it, it's no big deal. I mean, you're an intermediate 2 by this point, so you should be able to do it. All right, so now I'm just filling things in. So remember, I'm going to do this the same way every time. Remember, this is the indirect method. So I start with net income, and then I'm going to add back depreciation, amortization, depletion, any of those non-cash expenses that affect income. Now remember, once again, net income, somewhere in my income statement, I subtracted this $3,100 to get to $7,200. Right, now I'm adding it back. So I've subtracted it once and added it once, means it has zero effect on my statement of cash flows. And that's what I want, a zero effect, because it's a non-cash item. So I'm simply just, by adding it, I'm simply just backing it out. All right, gains and losses get backed out. All right, now remember, there's cash in those transactions, but remember, those are going to be captured in the investing section. All right, so gains increase income. So I'm going to subtract a gain. And we had a gain on the sale of $1,500. And then losses decrease it, so I'm going to add them back. So we had the loss on the sale of $400 on that sale of equipment in number 5. All right, so step 1, net income. Step 2, add back depreciation, your other non-cash expenditures. Step 3 is back out gains and losses. Steps 4, 5, 6, and 7 is to do my shortcut with my current assets and current liabilities. So let's run through that now. So we had an increase in accounts receivable. So that's an increase in a current asset. So I subtract the change, and that's $2,700. And just a quick note, I don't have it in these problems, but you might see it, is this accounts receivable is actually, I'll just write it here, is actually net. So if you have allowance for doubtful accounts, make sure you net that out first to do your change. Okay, you may see that, no problem. All right, we have prepaid insurance. That's also a current asset. It went down. I'm sorry, yeah, it decreased, so we add it. So that was prepaid insurance, and that's $400. And then we had an increase in accounts payable. So that's a current liability going up, so we add it, and that's $1,500. And then we had a decrease in income tax payable. All right, so it's a decrease in a current liability, so we subtract it, and that's $600. All right, so that gives me my net operating cash flows, and that's going to be $7,800. All right, then we roll right into our investing cash flow section. So we had three things here. We had the proceeds from the sale of the land. All right, and that was $4,500. So that's the cash number that we put the ICF next to. We had the proceeds from the sale of the building. I'm sorry, that was equipment. Number 5 at the bottom of the previous page, that was $1,200. And then we had the purchase of the building for the fort, and that was in number 1 on the previous page with the extra information. That's $14,400, and that's a cash outflow. So that would give me my net investing cash flows of negative $8,700. And we've said this previously that oftentimes the investing section will be negative because it costs more to buy something new than the cash you're going to get for selling older stuff. All right, we go to our financing section. So we had a few things here. All right, so we had the long-term borrowings. So remember, the long-term note payable went up by $7,000. Now look, that is us going farther into debt, but we're just concerned about cash here. So that's a cash inflow. All right, we had the issue of common stock. Like I said, it didn't say anything about this, so we're just assuming we issued it for cash. And then we had the payment of the dividend. All right, and that was $3,500, so that would be a cash outflow. All right, so my net financing cash flows are $6,500. All right, so now we want to get our net change in cash for the year. All right, so now I'm just netting all 3 sections together, and that works out to be $5,600. If you remember when we started the problem, we looked at the change in cash, and it was $5,600. All right, so that is usually a pretty good sign that we're on the right track here. All right, then just to finish it up, we would do cash beginning of the year, and that number was $4,000. Gives me cash at the end of the year for $9,600. If your teacher makes you do the supplemental disclosures, they would go underneath here. Like I said, I typically don't do that just for the sake of time for my students. All right, so this is another example. So between this video and the last video, and between all your homework and all the examples your teacher provides you, you should have a pretty good idea of how to do an indirect statement of cash flows. And like I said, make sure, 1, you understand between the difference between direct and indirect. But 2, make sure you can do this. If you are only going to have one problem on a test from this chapter, if it was, it's really no secret that it's probably going to be, it's definitely going to be a statement of cash flows, and it's more than likely going to be an indirect method problem. But make sure you can do the direct, especially if you're going to have multiple problems from one chapter on a test. All right, so this kind of wraps up the main part of our statement of cash flows, which is typically one of the last chapters you're going to cover. All right, so hopefully these videos have helped you. Make sure you spend some time going through these. I know they're a little lengthy, but hopefully they'll help you. Make sure you share them with your friends, and hopefully this will help you come test time. All right, everybody. Hope this has helped. Take care, and I will see you next time. Thanks.